Now, for the last 2 years, I've been full-time trading, but been involved for trading for around about 7 years. But the first 5 years were a matter of didn't know what to do, following different advice, wrong advice. I'm not really simplifying my trading. So I'm just going to do a quickly 3-step guide on day trading in 2023 to make it very, very easy. Beginner's guide for people who want to take it, get the freedom, the lifestyle, work from wherever they want to work from and earn money to do that. So the first thing that we need to do, which is very, 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 very important, is we need to choose a platform. Now, when it comes to choosing your platform, you need to get familiar with this because there can be many, many mistakes that I have made and many other people have made along the way when you first start getting involved in crypto with USDT, Bitcoin, whatever it may be, and how you're going to trade. And platforms have different strengths and different weaknesses, but the most common one is obviously Bybit and Binance, and then you've got BitGet, many, many others, and also Fairdesk. Now, if you see my streams, you know that I like to use Fairdesk and Bybit. I'm going to quickly go over the user face, user-friendly, etc. with Bybit and with Fairdesk. So this is Bybit, one of my practice accounts that I practice on, etc. And you can see the user face. This is just on the spot at the moment. You obviously got your derivatives, your markets, buy Bitcoin, whatever it may be. And it's very, very user friendly. You come over here and you can just put your margin in on your leverage. When you go to leverage, you can just put your limit in. So if I want to put a limit in at say 25,000, I'll put 25,000. I want to put my quantity in, etc. Once you load with BTC, USDT, whatever you want to load with, and then you was to buy or sell your markets. Very, very user friendly. You've also got your tools if you want to tools like you would on Trading View as well. So very, very easy to see. You can see your order book over on here, and you can see, you know, the leverage if you want, etc. Whether it's USDC, whatever you want to do. Now, once you go over to derivatives, you can go over that and then put your leverage in. But as you can see, it's a lot easier to use. So now that we have number one and we've chose our platform, and we're going to get very, very familiar with that platform before we even start about trading in any simple type of way, the next thing that we need to look for is our strategy. Now, this is the key thing that will save you time. When I first got into trading, you jump from mentor to mentor, style to style. You see someone posting results, you see someone posting money. And with it being social media, it's kind of hard to really niche down and decide on your style of trading. So a very, very simple strategy, and the one that I'm going to show you quickly is obviously buy on the dip. It's very, very easy. It's something for you to get used to within the market, and you can back test that for a very, very long time, however you feel comfortable, and the majority of the time it will work if you get the right risk management. So that's the one that we're going to do. Second of all, we're going to pick a simple strategy. Now, picking our strategy is going to be based on the way that we look at charts. And the very, very simple basic TA that we must understand when we're first getting into trading is a bullish trend and a bearish trend. Now, a bullish trend, as you can imagine, is when the price is going up, and a bearish trend is when the price is going down. And we need this TA if we're going to be buying on the dip, because in the example that I'm going to show you now, it will mark the areas where you are supposed to buy. And if we're looking to sell in a bearish market, then it will mark the areas on where we are going to sell. So this is a very, very simple way of how you need to look at charts when you're looking at from a bullish point of view. We know that we're going to have this low, and then we're going to create a high. And we're going to then create a higher low, okay? We're then going to get a higher high, we're going to get a higher low and a higher high. And that is your bullish pattern you can see with regards to the price is moving to the upside. And a very, very simple strategy that you could start off with. Again, this is just for beginners. This is very, very simple. There's a lot more technical analysis and a lot more things to look out for. But if you're just looking for a very, very simple way to start in the market, and we're going to buy on every single dip. And it's as simple as that. That's what we're going to look for. So once we've created a high, we're going to look and see where we get some support. And then when we've created a high, we're going to support. And that's where we're going to be buying in the market. And reverse of that is when we're looking for a bearish trend, we're going to have a high, and then we're going to have a low, and then we're going to have a lower high, and then we're going to have a lower low and a lower high, etc. And what we're going to do on this one is we're going to look to sell on the market when we have our pullback back towards our high, and then we're going to do the same again. So we want the market to go down, and we want the market to go down. That is when we are looking to trade in a bearish momentum. So let's go over to the charts and have a look and use this rather than just showing you a quick lines, how it can work on the chart. So the first thing is we need to figure out where we are at the moment. So let's say we're looking around here and we're waiting for something. So we come to the charts and we are here. We're looking to wait for the price to come back down. You can see here, we buy. We then wait for the market to come up, and then we're waiting to come back down. We then buy. We're waiting for the market to go up. We look, we then buy, and etc. We're looking at, you can see at multiple times in the market where we could have potentially got into trades. Very, very simple stuff. But you can see we wait for a low, we buy. 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 And just by looking at that price action, this is on the 15-minute chart, you can clearly see that if you've got your risk management right, that is a good way to start and test that strategy. And then we'll look for an example with our bearish. So we got the high, and then we're going to come down to the low, and then we're going to buy. We're going to buy in this area. We're going that low for there. We're then going to buy in this area. And then we're just going to wait, and we're going to wait for everything. So this one actually doesn't come back down, and then you're going to buy in this area, etc., buy in that area. And you can see that market will allow you, once you start to understand the markets, an option to get into the market. So now that we've got our trading platform and we're very, very used to that and we're understanding how it works, whether that's Bybit or a Fair Desk, we've now obviously got our pick a simple strategy. We're going to get our simple strategy. We know that we're going to go on the dip, for example, or support and resistance, or whatever you want to use. But please start with a very, very simple one. Again, this is for beginners only. As you can see, we're looking to buy the dip. And then after that, you want to fund a small account or a demo account. We'll put fund a small account here, but we'll start on both the demo and funding a small account. And the reason that you must fund a small account or even start with a demo is because most people fail trading because they don't take the time to use a demo or a very, very small account. And I know this because nearly everybody that fails, including myself at first, did not do it the right way, rushed into it, thought it was a get-rich-quick scheme, and quickly understood that it will cost you a lot of money to learn this strategy, to learn this skill, if you do not take the right steps. Because 80% is psychology, only 20% is for the strategy and trading. It's very, very easy to see how trades pay out, but it's 80% of the mindset that we need to understand. And that means that we need rules in this game. So demo account, that's what I will be working on. You're going to set your small account challenge. You've got your strategy, you've got your demo account, very, very important. And then you've got your rules. Now, setting your rules is where this 80% comes in. It's very, very important that you set rules. It may be the time of day. It may be the time of your candles, 15 minutes, 1 hour, whatever it may be. You need rules. You need to make sure that you journal. You need to make sure that you write down each trade. But more importantly, more than anything, you have to have a set of rules. Now, those rules will come as you start to develop this strategy, as you start to see the rewards from your small demo account, and you've got to give yourself challenges. You more than likely will blow 3-4 of these demo accounts at first, but it's good to blow demo accounts or small challenge accounts because it's better than blowing a big amount. I see many people come into trading with 10 grand spare that they've got on alt, or 20 grand spare that they've got on a nice Bitcoin over the last few months or whatever it may be, not in this bear market. However, they go in to make a challenge and they get it all wrong. So please, this is vital, but you must have your rules when it comes to trading. So that's my quick 3 steps for day trading in 2023. Again, it's for beginners only. Very, very simple stuff. If you want to know more on how we trade, make sure you hit the links and get involved in our Discord, where I put all my trades in the morning, my trade plans. I have a look what is going on with the market, etc. That is in the link below. Hope you like the video. Please subscribe, and I will see you on the next one.